And for today's Business Matters, gold bugs, rejoice. The yellow metal is closing in on a new record, $3,000 an ounce, a big milestone in what's been an incredible run. It's up over 40% in the past year. Some analysts are thanking or blaming President Donald Trump. They say the Trump tariffs are sowing uncertainty around global trade. So investors are seemingly looking for a safe haven until the picture becomes a bit more clear. But gold has been on its record run since well before Trump won the election. It's up almost 55% in the last 2 years. Inflation and government money printing have centered on a rally similar to its record run during the period of stagflation in the 1970s. Iran's currency fell to a new all-time low against the US dollar on Saturday. Iran's supreme leader rejected talks with the United States after President Trump moved to restore his maximum pressure campaign on Iran. Iranians are facing an official inflation rate of about 35%, so they're looking for safe havens for their savings. They've been buying dollars, other hard currencies, and gold as well. Dollar has been gaining against the real since Trump's re-election in November. In 2018, Trump withdrew from a nuclear deal struck by President Obama and reimposed economic sanctions on Iran. Since then, the real has lost more than 90% of its value. McDonald sales fell at the end of 2024 as the company got hit with an E. coli outbreak last fall. Visits to the popular fast food chain plunged, and so did profits. Fourth quarter sales at locations open for at least a year fell 1.4% in the U.S. A year earlier, Q4 sales rose 4.3%. Monday's earnings report shows how damaging the E. coli outbreak was. It sickened more than 100 people across a dozen states and resulted in several lawsuits against the chain. Sliced onions on the quarter pounders were likely the source of the bacteria. But despite McDonald's having its biggest sales drop in the U.S. since the pandemic, overseas, things were a bit more positive. McDonald's posted a surprise increase in its global comparable sales in the fourth quarter, pushed by demand for its cheaper and discounted items in the Middle East, Japan, and China. Data compiled by LSEG shows the company's global same-store sales rose 0.4% in the last quarter of 2024, compared with expectations of a 0.63% decline. And this was driven by a 4.1% rise where restaurants were operated by local partners led by Middle East and Japan. Company executives said in a post-earnings call that demand was stabilizing in China. Fox Corporation has just bought a video podcast company that boasts some big-name clients. Megyn Kelly, Tucker Carlson, Dr. Phil, and Candace Owens all work with Red Seat Ventures. The deal represents an investment in a new era of media, the so-called creator economy, in which individual personalities reach millions of subscribers via podcasts and streaming shows. Financial details of the deal were not disclosed. While Fox News remains the highest-rated cable news network, the 2024 election cycle revealed that some audiences prefer to get their information from podcasts. Now, a bit of good news for American liquefied natural gas producers. India wants your wares. The Trump administration lifted a ban on export permits. Now, India says it's a good opportunity to diversify away from oil to natural gas. This is according to India's oil secretary. He's looking to almost double the share of gas in India's energy mix by 2030. The oil secretary said Indian companies would also consider buying stakes in U.S. liquefied natural gas projects. That's if the deals were attractive. The bulk of India's LNG imports under long-term deals is supplied by Qatar. Electric vehicle maker Rivian is opening up sales of its delivery vans to fleets of all sizes. Rivian made the announcement more than a year after ending its exclusive deal with Amazon. Rivian is known for its flagship SUVs and pickup trucks and pioneered the off-road electric vehicle. Has been demanding demand beyond Amazon for its commercial vans and has been testing them with large fleets. Despite the deal ending, Rivian reaffirmed its commitment to deliver 100,000 vans to Amazon by 2030. Amazon currently has 20,000 Rivian vans in its fleet. Rivian's announcement comes months after it resolved a component shortage that held up production. Last month, the company surpassed analysts' expectations for fourth quarter deliveries. T-Mobile and Starlink is teaming up to launch satellite-based connectivity. The telecom giant said it will introduce satellite-to-cell service powered by SpaceX's Starlink. And this comes as the wireless carrier aims to eliminate mobile dead zones and extend connectivity to remote areas. It could potentially enable seamless coverage anywhere on Earth. T-Mobile said 500,000 square miles of the U.S. can now stay connected that was previously unreachable by terrestrial cell towers. It's going to be available in July for $15 a month. The carrier began a wide-scale beta trial of the service on Sunday. The company will provide the service free for customers until its launch, and after, it's going to be included in the carrier's premium Go 5G Next plan at no extra cost. And a major Chinese EV maker is offering self-driving features to cars under $10,000. And it's a move that far undercuts competitors, for example, Tesla. And this is a move that some analysts say could start a new price war. China's BYD on Monday started offering advanced autonomous driving features on most of its models, including ones priced as low as $9,555. The features enable cars to navigate highway traffic autonomously under human driver's supervision. BYD had previously only offered such features in models priced from $30,000. Now, just a bit of comparison for you. Tesla has these features available in China in its EVs priced from $32,000. And moving on, President Trump said on Sunday that he's directed the Treasury Department to stop minting pennies, citing the high cost of producing the 1-cent coin. Trump wrote in a Truth Social post, quote, "For far too long, the United States has minted pennies which literally cost us more than 2 cents. This is so wasteful." And earlier, I discussed this with Joseph Trevasani, senior analyst at FX Street. Take a look. First of all, let me ask you, do you think, and forgive me the pun here, does getting rid of the penny make sense?
Of course it does. This has been coming for a long time. It just makes logical sense. If something is not really used very much, I bet you most of the pennies in the country that are in coinage are sitting in jars and shoeboxes places. More payments, even between personals payments, are moving to electronics, and it costs almost 4 times as much to make a penny. I don't see what the logic is for keeping it. And this has been true for 2 decades almost.
But do you think discontinuing the penny is going to affect at all everyday financial transactions? Are we going to start off rounding off prices then?
Well, yeah, I think you will probably start seeing rounding up on pricing. Part of that is so that for the portion or the percentage of people that show up in retail stores with cash, if the merchant doesn't have the pennies on hand for the price, then they're going to have to round up what they give the customer back. So I think you probably will see prices lose the 99 cents.
Is it expensive for businesses, do you think, to process small coins? Is there going to be an impact at all for transactions?
I think it's mostly an inconvenience because they don't get, if you're a retail merchant, you get into the store bills far more often if you get cash at all than you're going to get coins. And people no longer carry around a coin purse. They don't carry around a pocket full of change. It just sits at home in drawers and in bowls. So I think for the retail establishment, it is an inconvenience and a problem keeping enough coins on hand to make change for the people who come in with cash. So as that draws back with pennies, I think it'll be an advantage to the retail stores.
How significant are the savings, do you think, from discontinuing the penny?
Oh, I don't actually know, but I doubt they're very significant considering the size of the federal debt and how much we are running a deficit every year. I don't think this is going to be a major moneymaker for running down the debt. But nevertheless, if you're going to work on the debt and the deficit, you're going to gain by making every change you can that benefits the direction you want to go in. So there isn't any logic for not doing this.
What do you think would eliminate the penny mean producing more nickels to fill in the gap?
Yes, I think we probably will. I mean, so much of payments on all levels are moving electronically that's the direction we're headed, and that's not going to come back. Cash has its uses, but I don't think that getting rid of the penny or even getting rid of the nickel is going to make a lot of difference to the economy. So I don't think that this is going to be a change that's really over time going to inconvenience almost anyone.
But why do you think Trump is doing this, or at least thinking of doing this? I mean, does it have something to do with inflation, that the penny has lost its value over time?
Well, the penny has certainly lost its value. I mean, the one thing that you do see and what people will understand somewhat from getting rid of the penny and then perhaps getting rid of the nickel is the cost, the change in overall pricing in a person's lifetime and even shorter that occurs from inflation. The penny is useless now. No one really, it doesn't give you any value at all. You could say the same about a nickel. You could almost say the same about a dime. About the only coin that has any real practical use right now is the quarter. That is a reflection of inflation and the Fed policy of running 2% inflation.
Well, if the U.S. discontinues the penny, do you think existing pennies will be more valuable?
Over time, but probably not in my lifetime, perhaps in yours. There are millions and millions, I don't know how much in actual value, of pennies, as I said, sitting in penny collection jars, sitting in piggy banks, sitting in glass bowls everywhere in this country. And they are not going to be brought out and put in coin folders and turned in anytime soon. Maybe in 100 years, yes, but I wouldn't see it would make any difference right now.
And what about the U.S. Mint? Could this impact the U.S. Mint, for example, potential job losses?
Yes, it will help. I mean, if they don't have to spend if they don't have to spend 4 times as much as the penny's worth to mint them, then they will have less cost on their coinage side. Whether or not you end up with any kind of, pushback on this from consumers or anyone else, I doubt it very much. About the only thing I can think of that people might get or might feel about this is nostalgia. Well, I don't think that's enough to really change any view on this.
Okay, just one last thing. I mean, if you look at the numbers 1 to 9, right? 5 of them will be rounded up, 4 of them will be rounded down. So more likely than not, your grocery prices are going to go up.
I would say you're right about that. If a store has to choose where to round up because they don't have any more pennies, they're going to most likely they're going to round up higher. You're right. So there will be a very minor inflationary impact. That's probably true.
All right, Joseph, good to see you again. Thanks for coming on.
Thanks for having me on. Always a pleasure.
Meanwhile, shares of American steel and aluminum producers surged today while their European counterparts fell amid President Donald Trump's plans to impose an additional 25% tariff on the metal imports. American steel makers have been grappling with lower demand as they compete with an influx of cheaper imports. Roughly a quarter of all steel used in the U.S. is imported, the bulk of it from neighboring Mexico and Canada. Close allies like Japan, South Korea, and Germany contribute as well. Trump imposed 25% tariffs on steel and 10% duties on aluminum during his first term. He later granted several trading partners duty-free exemptions, including Canada, Mexico, and Brazil. Disney has quietly dropped 2 DEI initiatives from a yearly filing. The Reimagine Tomorrow and the Disney Look initiatives were missing from the company's 10K filing. In its previous 2023 filing, Disney said Reimagine Tomorrow is a digital destination for amplifying underrepresented voices. In the same filing, Disney said the Disney Look was to cultivate a more inclusive environment that encourages and celebrates authentic expression of belonging among employees. Though it's not clear whether the removal in the regulatory filing means Disney won't have anything to do with such initiatives, since it hasn't been specified in its intentions. A retirement plan milestone. The Wall Street Journal reports that for the first time, half of private sector workers are participating in 401k plans. It was 43% a decade ago. The 50% participation tipping point comes nearly 50 years after Congress passed a law paving the way for 401ks. In recent years, access to the savings plan has increased as more states require companies to offer the option. Companies are also automatically enrolling more people. But despite the milestone, the journal reports 40% of the working population isn't saving enough to maintain their lifestyle throughout retirement. Could DeepSeek be deeply misleading? Google DeepMind founder Demis Hassabis says many claims about it are exaggerated. Here's the story.
Top AI mind Demis Hassabis says the hype surrounding China's DeepSeek AI model is misleading. Hassabis, founder and CEO of Google DeepMind, says DeepSeek's claims are exaggerated.
They seem to have reported just their final training run, which is actually a fraction of the cost it normally takes to explore and train and do all the tests.
When DeepSeek launched, the company said it cost only $6 million to train it. The news tanked all AI tech stocks. A later report from SemiAnalysis estimates DeepSeek spent much more, $1.3 billion for servers alone. Hassabis also says its technology isn't an outlier.
We don't see any silver bullet new technologies or techniques that we hadn't seen before or hadn't invented before. They've just applied it very well.
He says DeepSeek seems to have relied on Western models to create its own model, and that Google Gemini is more efficient cost and training-wise.
I don't think that's anything more than an iterative advance over what's recently been released by OpenAI, and perhaps, according to OpenAI's claims, distilled from that.
AI expert Pam Ann Cronin agrees, though DeepSeek still includes innovations, such as its mixture of experts technique, using specific blocks to complete specific tasks instead of all its blocks, saving money. In the end, the model itself may not be the most important thing.
The really important thing here is to understand what data has been provided for training the models initially and what the quality of the data is that you use as a user of these tools.
AI expert Steve Zisk says people need to trust the answers the models give. And this is based on the quality of data. He also says AI is still in early days, and the status quo will constantly change.
And on to markets now. Wall Street's main indexes closed higher, as you can see here. It was lifted by Nvidia and other related stocks, while steelmakers surged after President Trump said he would impose additional tariffs on steel and aluminum imports. Now, with fourth quarter reporting season over halfway through, S&P 500 companies are expected to have posted year-over-year earnings growth of 14.8%. And this is good news because it's up from expectations of less than 10% at the beginning of 2025. And all right, with that, all on today's Business Matters.